if Bitcoin is going up at 50 or 60% per year, then why would I buy anything else that's going to cost me that? So what happens is it changes the cost of capital. So then it's like, do I really need that vacation? Do I really need that new house? Should I get that new car? Because I could just hold it in Bitcoin. And that Bitcoin, whatever, it's 115,000 a day. I think it'll be $1 million in 5 years from now. That's a 10x. If I just wait 5 years, it'll be $1 million. Every Bitcoin I saved or spend today or don't buy today, it'll be $1 million. It'll be $15 million in 15 years. Am I willing to spend that 100,000 a day? That could be 15 million in 15 years. Now, if it's the beach house for my kids, hell yeah, I am. I'll trade all that money in the world for that experience with my kids. Yes, I will. But if it's that vacation,
because you have a lot of money already.
Because I've gotten there.
Of course.
Mark Moss begins by reminding us that most people don't grasp what inflation actually is. Moss claims that rising grocery store or gas pump prices are only a symptom, despite the media's blaming. The growth of the money supply is the true cause. Like pouring air into a balloon, central banks are inflating the system itself when they make additional dollars out of thin air. Although the balloon may appear to be in good condition at first, pressure increases as more air is pumped in, and finally it bursts. Prices increase because each dollar is worth less, not because commodities are worth more. Moss contends that our current financial crisis is rooted in this cycle of money printing, mounting debt, and diminishing purchasing power, and that knowing it is essential to safeguarding your wealth. For further updates on Bitcoin and the wider world of digital assets, please take a moment to like this video, subscribe to the channel, and enable post notifications before we go any further. Thanks, and enjoy the video.
The money is losing value much faster than people think. The government reports what the CPI or consumer price inflation is for us. And so basically they take a basket of goods, they track that basket over time, and they tell you how fast prices are going up. But that's not what's actually happening. That's the result of what's happened, right? So it's the increase in the money supply. That's what's going on. And so rather than the CPI, in the US, it's 2 to 3%, the target's 2%. The target is to steal only 2% of your wealth per year through inflation. Jerome Powell, head of the Federal Reserve, just had their meeting, and they basically said as much that they're going to sort of abandon that 2% target, meaning like let it run hot. But the real rate of inflation or debasement, or the amount that you're losing in your bank account, is really the rate of the increase in the money supply. So if you think about actually the word inflation, it's like if I was going to blow up a balloon, I'm going to inflate a balloon. I'm increasing the volume of air in that balloon. So inflation is increasing the volume of money in circulation. And so what happens is when they increase the money supply, prices changing as the result of that. So we're trying to track CPI, we're looking at the result, but we want to understand that. So what is that? So over the last 5 years, globally, the M2 money supply has gone up about 8% a year. In the US, it's gone up a little bit faster. So it's somewhere in the 8 to 10% per year range is the amount that you're being debased or you're losing that purchasing power. Then you could add in, say, a 2% risk premium. So now you're 10, 12%, somewhere in that range. But that's the rate that you're losing. That's back to the hurdle rate. That's your hurdle rate. So now if I'm going to lose 10% per year, then everything I do has to go make me more than 10% a year. And so I think once people realize that, it starts to, again, sort of like almost, as I said earlier, once you set your sight on what you want, it starts making your path much more clear. Once I realize that I need to beat 10% inflation, it starts making all my business decisions and my investment decisions much more clear. Because now you have this basket of things that you can invest into. If your Ray Dalio is going to tell you 17 things in your portfolio, well, of those 17 things, 15 are not going to beat that number. So let me just go focus on these two things. And that's NASDAQ, that's tech, and that's Bitcoin. What happens is when you start to realize that the fiat system is meant to turn us into consumers. Consume. One of the reasons why they have inflation is they want people to spend money. The government thinks they have to stimulate people to spend money. The reality is people should be stimulated to save. They don't need to stimulate people to buy, but they want to stimulate the economy. You talked about the velocity, I think earlier, about the money. And so like during the COVID pandemic, everybody started hunkering down and saving money. That was terrible. So they injected trillions of dollars of stimulus to get people to start spending again. So humans just want to spend. And part of that is sort of ingrained into us being the consumers, but also because our money's losing value so fast. And once we get Bitcoin, we realize that, oh, my money can actually buy me more goods and services in the future. And so if it can buy me more goods and services in the future, then maybe I should wait. You see, on a fiat system, my money's going to buy me less. So I should probably spend it as quick as I can, because if I wait, it's going to cost me more money in the future. But with Bitcoin, it's the opposite, where it's like, oh, it'll be cheaper for me in the future. Maybe I could just wait. You talked about the hurdle rate. So the hurdle rate is that if Bitcoin is going up at 50 or 60% per year, then why would I buy anything else that's going to cost me that? So what happens is it changes the cost of capital. So then it's like, do I really need that vacation? Do I really need that new house? Should I get that new car? Because I could just hold it in Bitcoin. And that Bitcoin, whatever, it's 115,000 a day, I think it'll be $1 million in 5 years from now. That's a 10x. If I just wait 5 years, it'll be $1 million. Every Bitcoin I save or spend today or don't buy today will be $1 million. It'll be $15 million in 15 years. Am I willing to spend that 100,000 a day? That could be 15 million in 15 years. Now, if it's the beach house for my kids, hell yeah, I am. I'll trade all that money in the world for that experience with my kids. Yes, I will. But if it's that vacation,
because you have a lot of money already.
Because I've gotten there.
Of course.
But what happens is we start to look at things through that lens, and it's like, do I really need that? And so what happens is, again, we don't want the money. We want the things that buys us, but it helps us make better decisions. Right? And that's why it changes our life. It starts to show us, it changes our value system. It shows us what's important or not. And it will also change the world, because in the world, we have so much misallocation of capital, so much malinvestment. We're investing into all types of things that are never going to work. We're spending money on things that we probably shouldn't be working on, money chasing problems that don't need to be solved. But when you start thinking about it in terms of Bitcoin, it makes you much more selective. And I think that's a good thing.
What about the price, according to Mark Moss? That way of thinking is totally off the mark. When investors purchase businesses like Tesla, they do it with an eye toward what the company may become in the next decades rather than what it was worth years ago. However, with Bitcoin, individuals become trapped in the past, concentrating only on what they missed. That way of thinking is unreasonable. Moss suggests that we should think of Bitcoin in the same manner as venture capitalists think of businesses. Similar to how Uber and Airbnb didn't have to take over their entire sectors to achieve enormous value, Bitcoin doesn't need to completely replace the banking system in order to continue to expand. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
And you know what? Michael Saylor said that in everyone's portfolio, there's typically a little bit of room for risk. So kind of going back to that hierarchy of needs and the levels to the game, like, get your foundation built, secure some capital, and if you want to gamble with some of the money, like, go for it. But you compartmentalize it, right? You take a small percentage of that. And what wealthy investors and professional investors understand is that we always think of things in terms of risk-adjusted returns. So things that are more risky have a higher return profile, and we put less amount of capital in there. And things that are less risky and have a lower return profile, we put more money. So we don't put the same amount of money evenly across the board. We allocate it differently. And so if you want to take those 99, or let's call them moonshots, if you want to take those moonshots, do it. If that's fun for you, do it. But just do it with a small percentage of your portfolio.
You said, I think Bitcoin will be worth $1 million by 2030, so in 5 years. Why?
Yeah. So there's a few ways that we can look at Bitcoin. And what's really interesting about Bitcoin is that almost everybody thinks that it's too late. It's too expensive. I missed it at 10 cents or $10 or $10,000, so it's too late. But the interesting thing with that is that people buy stocks based off of a future value. So you're going to buy Tesla today at a, 80 times PE ratio. So that means it's going to take 80 years of profits to get the price that you're paying today. 80 years. You're going to buy the Mag 7 is around a 30 to 50 times PE ratio, right? So I'm buying these companies based off of a value I think it'll be worth in the future, but for some reason you're looking at Bitcoin in the past. So that makes no sense to me. So what we want to do with Bitcoin is just like any other stock. What do we think it'll be worth in the future? Well, how do we back into that number? So stocks have earnings. And let's just think about the absurdity of this, because Bitcoin's going to change all of this. The absurdity of this. So I'm going to buy this Mag 7 company based off what I think their earnings will be in 30, 40, 50 years. Their earnings, not their capital base, not their assets, their earnings. Okay, well, tech changes really fast. How do I know they'll be earning that in 30 years? Number one. So if we think about where will Bitcoin be in 5 years, 10 years, 20 years, well, we can look at it from a couple different angles. So there's a couple ways that I look at this. So I can run you through some math. One way I look at it is sort of like through a venture capital lens. So I've been deploying venture capital for over a decade, 5 years in just the Bitcoin space alone through the Bitcoin Opportunity Fund. And when we're investing money into a venture capital, let's use an example most people would understand, like let's say Uber. So whatever it was now, 15 years ago in Silicon Valley, we sit down, I'm like, hey, I have this app. And you can call a ride anywhere in the world. And you're like, oh, like a cab? I'm like, yeah, it's like a cab, but it's better. It's an app and it's seamless and it takes all your payment in there and you can get black cars and whatever. And you're like, okay, I guess. How much is it worth? I'm like, 100 million. And you're like, 100 million? Like, where'd you get that number? So what we would do is we'd say, well, the taxi industry is this big and the limo industry is this big and the vans are this big. And if I could get 5% of each of those markets, then I would get this valuation. So Uber did that, right? Airbnb did that, right? They took a little bit of market share from hotels. Hotels are still there today, obviously, but they took a little bit. Uber and Airbnb both captured 10% of their markets in less than 10 years. Right? So that's how venture capital looks at that. So what we would do with Bitcoin through that lens is we'd say, okay, well, what markets is Bitcoin disrupting? Well, it's not competing against MasterCard or Visa. It kind of is, but it's not. It's really competing against value itself. So where do we store our value? Where do we store our wealth? Certainly we spend it, but at some point the creators get more than they consume and they save it. And so typically those are in what we call store value assets. And that'd be real estate, that'd be stocks, that'd be bonds, that'd be gold, that'd be collectibles, fine art, things like that. That basket of store value assets globally is about 1,000 trillion, $1 quadrillion today. Now, just to put this into some terms people can understand, to understand the magnitude of this, in 2010, that was 300 trillion. Then it was about 800 trillion in 2020. It's about 1,000 trillion today. By 2030, that should be about 1.6 quadrillion. Mm-hmm. Now, where do we come up with that number? Well, we can look at, again, nobody wants money. So what happens is we want the goods and services. So what we have is the goods and services of the world are wealth, and money is what we use to get that. So it's all the goods and services of the world, all the wealth of the world divided by all the money in the world. Mm-hmm. And as they increase the money, the asset prices, the value goes up. So what we do is we look at the rate of the monetary increase we talked about 10% per year. Now, in the United States, the Congressional Budget Office, the CBO, projects out for the next 30 years through 2054 what the debt will be, what the deficit will be, what the annual budget will be. So we know for the next 30 years what they project, and they're going to undershoot the target, but let's just go with the numbers that they project. So we can see how much money they expect to inject in the system over the next 5 years. And then we can extrapolate that number to how much that store value assets should rise, that basket. So I think it'll be worth about 1.6 quadrillion.
Mark Moss outlines a daring and ambitious plan for the future of Bitcoin. He begins by drawing comparisons between Bitcoin and venture capital ventures such as Airbnb or Uber. Bitcoin doesn't have to take the place of the global financial system right away, just as these businesses didn't have to take over their whole sectors overnight to succeed. It will expand gradually, taking market share from the store of value over decades as opposed to days. According to Moss, the worldwide store of value market, which includes assets like equities, bonds, gold, real estate, and collectibles, is currently valued at about $1 quadrillion and is expected to reach about 1.6 quadrillion by 2030. He calculates how much of that market Bitcoin could actually take by looking at how governments are putting money into the system. He estimates that by 2030, Bitcoin might hold around over 1% of the global store of value basket, or nearly $1 million per Bitcoin, based on conservative assumptions. Moss goes on to predict that, if current trends continue, Bitcoin may reach $14 million by 2040 and possibly $45 million by 2050 as the market and its usage continue to develop. According to Moss, perspective is the most important lesson. Similar to venture capital investments, long-term worth should be evaluated by evaluating probable future acceptance, market capture, and scarcity. However, many individuals concentrate on Bitcoin's historical pricing or short-term volatility. With just 21 million coins in circulation, Bitcoin is extremely sensitive to changes in global liquidity, which could make it one of the world's fastest-growing assets over the coming decades. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.